Okay, for the Wall Street Exclusive, I'm Joe Springer. How much of your stock market money should you have in cash? Well, if there's a big correction, I want to be able to pounce. How much should I keep in cash? And the answer is 0%, 0%. If you're trying to time the broad market, that's a mistake. Individual security analysis has made all of the famous investors famous. There are few, if any, famous market timers. With the broad market's made up of people around the world, how can you know what all those things are going to be doing? And individual security, now you can start to get an edge. Okay, so the only money that should be in your stock market, your stock market money needs to be your long-term money in the first place. So if you don't need that money for a while, leave it in the market. Trying to time the market is foolish. If timing the broad market could be done consistently, there would be lots of rich market timers, and there are not. All the rich famous investors are basically value investors. They're all people that looked at individual securities. Broad market timers, very few and far between. Probably people have done it and gotten rich once, got it right once or twice, but to do it consistently, there's just not many people like that. Cramer said this last week. In fact, one of the chief reasons that I outperformed pretty much every other manager in the business during my 14-year run as a professional money manager is that there were substantial blocks of time when I was largely in cash, quote unquote. Cramer had some very good famous market timing calls where he was right. Cramer also had some very bad famous market timing calls where he was wrong. Cramer wrote his autobiography called Confessions of a Street Addict. It's the only book that's not an audio book. It's the only one of his books he doesn't really promote. He even said, people asked him, why did you write that? And he said, well, people asked. So he wrote it. What he says he did in Confessions of a Street Addict was not time the market, maybe once or twice or something, but it was all about getting an edge in individual securities, and that's what you should do too. So how much of your money for your stock market money should you have in cash to pounce for when the market goes down? 0%. When you can name a list of smart people that can time the market, well then maybe it's time for you to model yourself after them and try to time the market too. Instead, don't try to time the market. Let the market work for you, and leave it there. Okay, and if you don't know where to put it, if you're not an active investor, I like the VO, the Vanguard Midcap Index Fund, and or there's the S&P 500 if you'd rather do what other people are doing. Just remember, there's always, literally always, at all times, there's always somebody telling you that the sky is falling. So if you're looking for the green light, it's okay, it's all clear to go all in the market now. Never going to happen. Okay, so if you do want to, for your stock market money should only be your long-term money anyway, not what you need in the next 5 years, and that should always be fully invested. Okay, go to the VO if you don't know where else to go. If you want, here's five broadly diversified stocks in the Aristocrat portfolio that we've already talked about. Hormel, US Ecology, Compass Minerals, Tonix Pharmaceuticals, Endurance Holdings. There's 5 broadly diversified, excellent, outstanding companies. In my opinion, you can put your money there and leave it and do very, very well. All right, so don't put your money in cash thinking you're going to time the next move. That money sitting in cash is just as likely to, well, going historically, it's more likely to sit there while the market gets away from it. Okay, next we're going to talk about Hydrogenics, and they just had their first profitable quarter. Very exciting.